how much money an investor could make on their initial investment. So if you have a 2x equity multiple, you have 2x your money. For our investors, it is a passive investment. Everybody pretty much has a W-2 active income, or maybe they were real estate investors before that don't want to deal with the tenants, toilets, trash challenges and recognize that they could make a better return through us in real estate investing rather than managing it themselves, and partnering with people within the space and investment to be able to go out and get bigger assets. So it is a passive investment for our investors. It is not a passive investment for myself and Mark as general partners. We are the ones with boots on the ground, going out, finding deals, underwriting deals, managing the properties, getting our hands dirty with everything that transpires amongst the real estate space. So for myself, Mark, we're the ones doing the heavy lifting, and it is a passive investment for the investors that we have. We are open book, though. We always are willing and excited to talk about anything that any investors are interested to learn about. So if they're wanting to dig into more details, we are happy to share that and want to provide as much detail as we can to them. For starters, we want to work with people that we enjoy working with. I think that's an important piece, that you're really signing up. It's not, I bought a stock and I have no affiliation to Apple or Microsoft or whomever that the stock is. Like, you're really buying shares in this company, and we will be, we're working together for years to come. And with that, there's got to be trust and communication on both sides. And that's an important piece. We don't want to work with anybody that is going to be a pain in our side. And so that's one part of it, just overall personality piece and making sure that it's the right fit for both parties. And then you look at, what their goals and aspirations are for, let's say, real estate investing. That's the next one, making sure there's alignment there. We're not a company that likes to just flip a property and then, get you a return in 6 months, a year sort of thing. We're looking to hold on to assets, get money back through refinance or the sale of property, but that might be 2, 3, 4 years down the road, and maybe even hold on to properties a total of 8, but maybe get money out through the refinance process. So, what are your goals? What are your aspirations? And then the last one, as far as what we're looking for, not necessarily financial requirements per se. We have people that invest $15,000, which is our minimum investment today in the real estate fund, all the way up to over $200,000. So it's really predicated on what the individuals feel comfortable with and what they are wanting to invest at that time. So it's not something that we want to push on anybody. It's, what are they looking to do? How can we help them achieve their financial goals? In my opinion, in Mark's opinion, real estate is the best investment out there. And we want to be able to give access to those individuals that are interested to go on the journey with us and make some money. Profit and loss statement is one of the most critical. Like, is this property going to make money? That's the number one. Basically, that's where all of it derives from. And then from there, all right, how much money is it going to make? How are we going to be able to pay a distribution to investors? How much are we going to be able to pay? When would we be able to get the money back to investors? So those are all things that we look at. So internal rate of return is kind of a standard metric within the commercial real estate space when you're comparing deals. Average annualized return is another one that we look at. And then cash on cash return is a third. And then the fourth one that we look at is equity multiple. So those are some of the key metrics, but we really look at, we have a pretty comprehensive spreadsheet that all the numbers go in, and then we can look at the numbers and the profitability of the property in different slices, different angles. So from there, we'll even look at, all right, what's the overall returns of this property, this project in general? And then, all right, if I'm an investor and I invest $100,000, like what would that flow look like? Is that attractive to our investment community? Could we go out and raise the money to go purchase this asset? That's another thing that we look at. And then from there, we can play with numbers to look at, all right, how do we structure this deal that ends up being attractive for our investors and make sure that we're compensated on the general partner side as well to fund our overall activities and effort for this project. All right, so when we look at deals, we're looking at, I mean, starting point is the profit and loss statement. And from there, we're looking at a variety of different metrics, but there's four that really kind of are maybe the staple in some of those key metrics that we're looking at a high level. Hey, does this deal make sense or not? First one is average annual return. So essentially that's just a percentage that represents a fund historical average return across given years. So kind of you think of it as a metric across each even year. There's no relationship to time value money, whereas IRR, so internal rate of return, is another metric that we look at, and just kind of a common metric across commercial real estate that people measure different deals to. And that one estimates the profitability across that time period that the if a deal is, it also incorporates if a deal closes quicker, then we're able to capitalize on a higher rate of return. So it incorporates like time value of money, meaning that if we sell a deal in 2 years, we can now go repurpose that money. There's value there in comparison to, let's say we sold over 8 years for that same valuation, for instance. There's a lot more value in selling over 2 years rather than the 8-year time period. Another one that we look at is cash on cash return, which is just the ratio of annual before tax cash flow to total amount of cash invested. And then the last one we look at is the equity multiple, which is the total cash distributions received from investment divided by the total equity invested, which is essentially how much money an investor could make on their initial investment. So if you have a 2x equity multiple, you have 2x your money. So those are some of the just simple metrics, 4 basic ones that we look at and compare certain deals to, and so just a common metric in general that you'll see out there within the commercial real estate space.